Hello, my name is Sheriff Daramola, and in this video, we are going to be taking a technical dissection of the USDJPY chart together with the utmost intent of identifying a potential trading opportunity that we can take advantage of for this week. And in fact, I was able to identify a simple setup which we can actually use to guide our moves. But before we go into the details of what our expectations are, I would like us to run through the key moments that we had during the course of last week before we go into the details for the week. Now, the week started with us on a bullish note for us on the USDJPY, and this was my first commentary at the beginning of the week, where we saw how price action was initially trapped within the 134.200 level and the 133.710 area. And in fact, this all situations was happening right above that key level that we identified at the beginning of the week, which was sitting at the 133.800 level. And if you recall vividly, this level was the neckline of that potential reversal pattern we identified on the daily time frame. So we are going to be looking at that in a couple of moments, but let's run through this and let's see what happened during the week. So we had the situation here. Whenever we have price action trapped within a channel, we want to see a breakout or breakdown, giving us an opportunity to either buy or sell. So with a buy stop order above the 134.200, we had our first buy position for the week triggered, and we continue to rather move all the way to the upside. And then 24 hours later, we saw the sell pressure resume, negating all attempt by the buyers to continue to the upside, and we were taken out of that position, hereby triggering a sell position at the 134.200. And then we had some movement. Price action did some movement, but it didn't last long before we begin to see some buy pressure resume on this chart. And with the situation here, we agreed during our live session on Tuesday that if price action does not find a lower low, we're going to be looking out for buying opportunity at the 134.200 level. Buy stop order there. Then we continue to add more positions if price action breaks out of the 134.550. So we had the buy position triggered here, and we rode the move all the way up, added more positions at the 134.550 before we were taken out of our buy position. So it was quite a scenario where we had ups and downs during the course of the week, and not until the later part of the week that we begin to see attempt by the sellers to push price to the downside. And with this whole situation here, we had a temporary demand zone sitting between the 134.550 and the 134.370, where we were looking out for a buying opportunity actually. And I said here that if we do not see a breakout retest of that 133.750, we are not going to be buying. And if a breakdown of that temporary demand zone happens, we're going to be looking out for selling opportunity. And with a sell stop order below the 134.370, we had our first sell position for the second one, and we rode the move all the way to the downside here before we begin to see some buy pressure resume around here. So these are our key moments last week, and if you do want to have a review of this on your own, I will be dropping the link to this commentary in the comment section of this video. And if you are watching this video from my YouTube channel, you will be seeing the link to this commentary at the top right hand side of your screen. So with that being said, here let's dive back into the chart, and here we are back on the daily time frame. And if you had been with me for a while now, you will have realized that the same structure you can see on your screen is still what we have been using for the last couple of months now, where we have a very strong demand zone around the 131.00 level, as you can see in the last 10 months in this market, price action had consistently found buying pressure above the 131. However, things got a little bit interesting during the month of February of this year, where we saw the final breakout of that bearish trend line here, which also lined up with a technical expectation that whenever price action breaks out of a key structure like this, we expect that one point in time price will come back, do a retest of structure to incite another wave of bullish momentum. And as you can see here, during the month of March, we saw this whole situation where price action transitioned into a setup that looks more like a reversal pattern. And for us, during our live session on Monday, we actually acknowledge this. And one thing we normally do whenever we have this kind of potential reversal pattern is to immediately identify a neckline, which shall be a platform upon which we are going to be looking out for buying opportunity, and at the same time the breakout of that neckline will give more validity to that reversal pattern, confirming it to be a mature one to join a bullish momentum. So with our neckline sitting at the 133.800 level, which happened to be our key level for last week, we saw the breakout of that structure happen, where we were lucky enough to be part of the bullish momentum, which actually moved about I think 140 pips thereabout before we saw the bearish momentum that negated the bullish attempt here. So the question right now is, the reversal pattern we've identified here, has it turned out to be a valid one, where we have a breakout, then we have the retest of structure at this point, where we have been seeing some buy pressure right above that 133.800 level during the later part of last week's trading session. Now the question right now is this a valid structure that we can have some confidence to join a bullish momentum? Well, if you would ask me, I would say that the bullish momentum we've seen so far isn't that having that traction needed to further emphasize the strength of the bias at this point. So we still need some level of consciousness around this area, where we want to see some confirmation that will actually buttress that bullish momentum. So I have a trend line here, which I will be deliberating on when we scale down to a much more lower time frame, which will definitely be my yardstick. So if price action continue to find buy pressure above that level, then we look out for more opportunities to buy. And if a breakdown of that trend line happens, then we might be considering a momentum shift, where price action will just continue that downtrend, hereby negating that potential reversal pattern that we identified earlier. But I was able to identify a simple setup which will serve as a yardstick in order to guide us to position ourselves in a very appropriate manner ahead of the new week on a much more lower time frame. But before we go into the lower time frame here, I think it's important that we also keep tabs with the fundamentals. So we want to be looking at the economic calendar to see what the majority in the markets will be anticipating in the coming week, as we are seeing how the market has transitioned into a consolidation phase during the course of last week's trading session. As you can see, price has been trading just within a very tight range here. So scaling into the economic calendar, as you can see here, we are going to be focusing on high impact macroeconomic events that will be affecting both the US dollar and the Japanese yen. And from what we have here, the first high impact event wouldn't be coming in until Wednesday, April 26th, and this might likely reflect on the chart as a very huge choppy situations before this event finally come in. So we have the durable goods order, which is a measure of the cost of orders received by the manufacturers for durable goods. These are goods plan to last for 3 years or more, such as motor vehicles and appliances. And from the data we have here, the previous data came in at minus 1%, and we have a consensus projection of 0.8%. That's some level of positivity to the US economy there. Then we also have the non-defense capital good order, which is released by the US Census Bureau. And this is a measure of the cost of orders received by manufacturers for capital goods, which means goods planned to last for 3 years or more, excluding the defense and aircraft sector. And look at what we have here. The previous data came in at minus 0.1%, and we have a consensus projection of 0.2%. That's another level of positivity also around that area. Then we also have the almighty GDP annualized for Q1 coming up on Thursday, April 27, and this shows the monetary value of all the goods, services, and structures produced within the US economy in a given period of time. And generally speaking, a high reading or a better than expected number is seen as positive for the US dollar, while a low reading is a negative one. And with the data we have here, we have 2.6% coming in during the previous data, and we have a consensus projection of 2%. So these are events also we are going to be looking forward to. Then on Friday, April 28th, we have economic event coming in from the Japanese docket here, and these are very, very, very significant high impact event here. We have the interest rate decision, we have the monetary policy statement, and then we also have the press conference from the Bank of Japan. So these are very high impact events that everyone will be looking forward to. So we have quite a series of macroeconomic events to look out for, and this will also help us to be able to position ourselves ahead of any potential move either way. So with that being said here, let's dive right into the lower time frame, which on the 4 hours time frame, I was able to identify a simple setup that we are going to be using to guide our trading activity for this week. So what I did here on the 4 hours time frame is to take into consideration the trading activity in this market in the last 4 to 5 weeks, which gave us a little insight into what has really been going on in this market. Though we have been having this bullish momentum, which is quite evident on this chart, with both the bullish trend line you will see here after connecting the series of higher lows. On your screen, we have this major bullish trend line for the confirming the strength of the buyers in this market. Then another thing we have here at the beginning of this month was a situation where price action transitioned into a structure here in the form of an ascending channel after we connected the series of higher highs and higher lows. Now, don't forget that we have our key level at the 133.800, which happens to be the neckline of that reversal pattern we identified on the daily time frame. And throughout last week, we saw our price action had continued to trade above that level. So we are still in a dilemma if this level will be serving as a platform for confirming the reversal pattern we identified, and at the same time will it be a platform that we are going to be using to guide our bullish activity for this week. Now, one thing we also want to take note of here is the fact that as soon as price got into that 135.00 level, another very key level that has been a major determinant of price action since the month of March, where we have been seeing some selling pressure around that area. Now the question is, will the sell pressure we witnessed during the course of last week here be so strong enough to incite a sell-off in this market? So as a result of this, we are going to be having this key level at 133.800 as our yardstick for trading activity for this week. Then one thing about this whole structure is that there is a tendency that price could still drop below the 133.800. As you already see here, we already have traces that sellers are still very present in this market. As you can see, that little drop to the downside, though we had an engulfing candle taking out all sell positions there, but there's still a chance that price could still drop to the downside, which for me at this point is still, I can consider this an opportunity for scalpers or short-term traders at this point, where price could drop, break down both the 133.800 and the support line of that ascending channel to trigger a sell-off in this market, where we could be having a bust stop at the 133.00 level, which also shares a confluence with that bullish trend line that we identified earlier to incite another wave of bullish momentum. However, if a breakdown of that structure happens and then we start seeing selling pressure below the trend line, then at this point it will be a signal that the bullish trend line there no longer have the capacity to continue to hold that bullish momentum. Then a sell-off in this market is very, very possible at this point. So these are one of the situations I will be looking forward to during the new week. Then another thing that could happen here is if price action continue to find buy pressure above the 133.800 level, respecting that support line of that ascending channel, then we might be looking out for structures in our lower time frame that will support a trend continuation to the upside, where a breakout of the 135.100 level will be a beautiful confirmation that buyers have finally gained that momentum needed to continue to the upside on this one. So these are the structures we are going to be using for this week, and I'm looking forward to the beginning of the week, where we want to see how price action will be reacting to that 133.800 zone area to decide what our next line of action will be. So you would agree with me that we have a key structure to use to guide our trading activity for the week at the 133.800. So at this point, I will be pausing the video here, and be rest assured that I will be with you in the comment section on my TradingView platform and my other platform to give you an update on what my expectations are after monitoring how participants in this market will be reacting to this current structure during the early hours of the week. I hope this video has been of immense help in making your personal decision on the USDJPY, and if it did, kindly support this project by clicking the like button. You might also want to follow me on my TradingView platform at Dark Sherry, so that you can be part of the daily commentaries I normally share in the comment section of all of my videos. Thank you for watching this video, and season's greetings to everyone out there, and do have a wonderful day. Bye bye.